All right, what is up, YouTube? Like I said, we'll be back for more videos. We're gonna upload each and every day, hopefully. So today I looked at my account, of course, on just about all the shorts we're losing on. I know, like I said, the market is overbought, and I do trust the technicals. As we see, we're up on Berkshire Hathaway. This is, like I said, a personal holding of mine, so I definitely am benefiting from it. Like I said, I'm short in my personal account. DWT, as we see, we're down just about $1,100. Oil has just about been overbought, and momentum is definitely carrying it higher. Starbucks, we're definitely moving higher with Starbucks. TVIX, we were able to buy some TVIX, and I know we were up on it early in the day. I know it hit about $5, but I was busy. I didn't make a video. XLU, um, that is further selling off, so it's now hitting the lower 50 end. So let's go ahead and check out a chart. Let's see exactly what's going on. So we see Expedia is still, it's still where it's at. Like I said, you're able to get in on Expedia, maybe profit about what is this? From 26 all the way to 140. I think it's at 144. Just about, like I said, all stocks fill gaps no matter what it is, but as long as this company is doing positive things, the company should fill the gap. So let's go to oil. Oil is heavily overbought. We see the momentum is to the upside. Also, we see that ceiling level is being broken out. So we see right here, it tried it right there, broke down a little bit, and then after we got that oil inventory report, that's when oil started to break out even higher. So right now, it broke out of that $62 range. Now it's at 63. If it does fall, we're going to look for it to fall right there at the same resistance level that it was holding. So definitely still bearish on oil. Even though oil is going up, I still think there is further downside on oil. So be very careful on that. Just because you see the stock going up doesn't mean it's going to continue to go up. At some point, people will take positions off and they'll say, you know what, oil is getting overbought. Let's go ahead and take out some of that profit. So let's go to natural gas. Natural gas really isn't doing anything. Let's go to gold. Gold stocks are, I would say, it's kind of, it's falling right back in that $1,300 range. So we see right here, we kind of breached that level. So now it looks like we might be range-based trading here. So we see right here, try to break out of that level right there, but now we're stuck right there at those same levels that we had problems right there. So like I said, oil might do the same thing. As you see, gold had trouble breaking right here above that 1305 level, 1306, whatever the level is. But at the same time, when gold broke out, you see that it started to, climb even higher. It got overbought, and now it's falling back on that 1308 known as support. And it looks like it might range-based trade for a while, or people might be trying to, get somewhat of, small returns here and there before they actually start to, go ahead and start to short the market. So let's go to the Dow Jones. We see the Dow Jones is kind of falling off a little bit, but we are still heavily overbought in the market. As you see right here, just about for the Dow Jones, the daily moving average is almost about $6 off. So we see right here an overbought period. We had an overbought period for the whole month of December. There wasn't really much volume going on in December, but at the same time, we did see a lot more buyers in December. We go to the triple Qs, which is the NASDAQ ETF. As we see, we're coming off that overbought level. Looks like it will come down to the daily moving average. It might, or it might not. We might have more positive growth. Another one I'm looking at the leverage ETF of the triple Q or the NASDAQ is T triple Q, and this definitely gives you 3 times return of the NASDAQ. You see right here from 68 all the way to 158. Don't expect for growth years to be like that, like we had last year, but this is definitely one way to step up your returns. Let's go to the S&P. The S&P ETF is still overbought. Like I said, it's coming off of that overbought level, but at the same time, there were still a lot of buyers in the market that just kept buying stock. Nobody was really selling. Like I said, a lot of these people, they're letting their money ride. They're not really taking positions off of the table. So what they're doing, they're just letting their money ride in the market. I'm not really sure what event, is going to scare people out of their stocks to where they're selling stocks, because last year we had all type of events and there were still no huge sales in the market. So let's go ahead and check out GE. I know GE is doing really good. This is one of my personal holdings. Like I told you guys, I bought it in the 18s, bought it in the 19s, also bought it in the 20s. So we see it looks like GE is starting to hit up to $19. And as we know today, or for the past week, people have been buying GE as a speculative play. So you could have bought some GE back there, back right in here, and just held on to the stock because GE is still, it's a pretty good company. But at the same time, it does not, it's not a Honeywell or it's not any other, any of its competitors where it grows shareholder wealth. GE is kind of like a stagnant company. And I think this might be a perfect way for shareholders to actually start to build wealth, the new shareholders, in fact, to start to build wealth. $18 when the stock traded last year around $32, $33. Didn't really do anything. It was really a boring stock. So this is kind of interesting to see the stock now below $20 and for people to actually get positions in on it. Let's go to Caterpillar. I talked about Caterpillar yesterday. Caterpillar was just about hitting all-time highs. Now it's definitely backing off of those all-time highs. Let's see if we get the chart to load here. I'm not sure what's going on, but Caterpillar was definitely off of all-time highs, basically. And what we want to see from Caterpillar, if you're interested in getting shares into Caterpillar, you really want to see the stock fall, or you want to see a sell-off to where the stock starts to be interesting, because 83 on the RSI, we see the momentum is pointing up really big. That's not something that we want to be interested in. So like I said, Expedia could be maybe like a speculative play, for our portfolio, for us to actually build some shareholder wealth. But Caterpillar is definitely one stock that I'm definitely taking a look at on a serious note to see if I can actually get some shares. But for right now, it's definitely looking way too bullish for me. I know that might not make sense, but it definitely does look way too bullish for me to actually touch it, because I'm not sure when this thing will fall, and I'm not comfortable touching this thing at all-time highs. So let's go to Deere, because we see it right there at the bottom. We see Deere pretty much doing the same thing. The tractor company, they're all doing the same thing. John Deere. So this might be another company that you might want to take a look at. So remember, like I said, you want to take a look at the competitors. You want to take a look at the groups. So you see right here, Bet on the Farm. So Caterpillar, Deere, and the rest of them, they're trading groups. And as you see, they have been on a tear. But Caterpillar is the only one that I think that has been parabolic, just about on going up. So we see Take-Two is really kind of range-based trading, not really expecting anything from it until they can actually get that Red Dead Redemption out. Activision Blizzard, I might buy shares in this maybe by next week or this week. But this is definitely an interesting company that I'm definitely buying into, because I do love playing those Call of Duty games. The TVIX, I'm not sure when the market will fall, to be honest with you. I don't claim to know, but I do claim to know the technical. So we are definitely heavily oversold at this point. There has to be some kind of market moving event to where stocks will fall. I know you see my account kind of decline there, go back to 203, but with a couple, easy investments or easy trades, we can build that back up. But right now we're focusing on shorting different stocks in the market. If you're interested in getting Berkshire Hathaway, this is the cheapest one. You can get the B-class shares, which I have in my account personally. As you see, it's beginning to get overbought. And just because it's getting overbought doesn't mean I'm going to sell it. This is definitely a long-term investment for me, just because Warren Buffett is pretty much, he has a diversified company, and he knows how to grow shareholder wealth over time. So we see that 205, like I said, 220 is definitely the price target I have for this stock. And yeah, I'm just pretty much letting my money ride in Berkshire Hathaway. So yeah, let's talk about something else. I know there was one stock that I was definitely taking a look at that I thought you guys should be aware of. Give me 1 second. Let me pull it up on my Robinhood account. Okay, Home Depot. Home Depot is definitely taking off, and these are the home builders. So we have Home Depot, we have the Lowe's, and other companies just like that. So you see, Home Depot has definitely built shareholder wealth long term. So like I said, if you're interested in the do-it-yourselfers, the companies like that, that's the way you can get into it. And you see, Lowe's is doing the same thing, same chart. Set, long as they trade in the group, you have to pay attention to the group names, because the group names, they pretty much trade in lockstep with each other. So pretty much if one is on fire, you're going to see the other one on fire. And you got the Bank of Americas, You got the Capital Ones. See, you keep seeing the highs. You keep seeing the highs from the financial group because, like I said, they trading group. So at some point, you're gonna get this. You're gonna get the point that I'm trying to drag across here. So long as you can find a group that goes up, there's really nothing to worry about. Or you can invest in the best one of the group, so that way you can always profit in the market. So like, I have a couple shorts in the market. Of course, I'm losing all my shorts because, as you see right here, I bought DWT. I don't have DGLD, but I do have TVIX. Now, with that being said, I do have investments that go up when the market goes down. So you have to be, I would say, you have to strategize your portfolio to where you have good stocks, good credible stocks that go up pretty much all the time on their good growth and their earnings. Also, you have to prepare for when the market falls down. You have to prepare for, when the market is kind of stagnant and not going anywhere. So these are things that you have to ask yourself, and the companies you have to take a look at to understand what's really going on for you to actually buy different stocks. But for right now, my portfolio is back positive thanks to Take-Two, thanks to GE coming in a big time, thanks to Berkshire Hathaway, Starbucks, and Kim Ors. So I'm pretty much positive. So I started the day off negative, but during the day I was able to crank out a positive number, crank out some positive dollars because of the investments that I did make over time. So, like I said, the video game makers, they move in tandem. I'm pretty sure the chemical makers, they move in lockstep. And, I have XLU, and I might buy some more next week just because this is an oversold group. And if you want to take it a step further to see which one is lagging in this group, you're able to go ahead and Google and see which holding is lagging in this group. But I'm pretty sure what's going to happen is XLU might be setting itself up to maybe outpace the market by the end of the year because it is pretty much oversold. There's no upward momentum in it. You see, the upward momentum tried to curve back up, but I guess there's more than one in here that is definitely lagging in the whole group. But like I said, if you're interested in taking apart and different ETFs, they have them where the holdings, they break down the holdings and show you how many companies you buy into once you buy into the company. But that's pretty much it for the video. If you have anything you want to talk about, okay. So this is one of the stocks that I wanted to show you guys. So this is one of the holdings that's bringing down the XLU. This is American Power. So go ahead and check that out. That's all I have for you guys. Take care.